Hey there, welcome back to my channel, it's me the Mind Injector. Today, we're diving deep into a topic that's on the minds of many of you out there, investing. But we're not just scratching the surface. Oh no, we're going all in. Whether you're about to dip your toes into the vast ocean of the stock market for the first time, or you're already wading through its waters but looking to swim a little deeper, this video is for you. What if I told you that starting your investment journey doesn't have to be as daunting as it seems, and there are strategies out there that can help you not just survive, but thrive in the stock market? Intrigued? You should be. Let's get into it. Let's start with a fundamental truth. Everyone has to start somewhere, and this old maxim rings especially true in the world of investing and trading in stocks. If you're a newcomer to the stock market, here's a little secret. Don't think of yourself as a beginner. Yes, you heard me right. In this realm, you're potentially your own best research director, money manager, and market expert. Is now the time to start trading stocks? Regardless of the market's current state, it's always the right time to educate yourself about how the stock market functions and identify where potential investing or trading opportunities may lie. Before you make your first trade, there's a crucial step you cannot skip: education. Trading education coaches unanimously agree. It's imperative to hit the books and study up. But where do you even start? Here are 5 pointers that demystify the process of getting into stocks. Take a page out of Warren Buffett's book. Never invest in a business you cannot understand. Think about the brands you interact with daily. The coffee you drink, the car you drive, the phone you can't live without. These are all starting points for constructing your investing thesis. Companies that are visible and omnipresent in our lives are probably catching the eye of the stock market too. Investing in them could offer a chance to not just support the brands you love, but potentially profit from their success. Understanding what buying shares means is crucial. It signifies partial ownership of a company and potentially a slice of its earnings. Familiarize yourself with fundamental metrics like revenue and basic earnings per share, and keep an eye on companies' quarterly reports. This can give you insight into a company's financial health and how it measures up against analyst expectations. Chart patterns, trading volume statistics, and other technical indicators are tools of the trade for many market professionals. These can help predict price movements, identify trends, or even spot a reversal before it happens. Combining a stock's 30-day simple moving average with its 10-day exponential moving average can give you a clear indication of its trend strength. Like any strategic endeavor, sound investing boils down to the numbers. Assessing risk versus potential reward, understanding valuation metrics like the price-to-earnings ratio, and comparing these against industry peers are fundamental exercises for any investor. Market movements can be unpredictable, swayed by a cocktail of human emotions. It's essential to have a clear investment strategy, distinguishing between short-term trading and long-term investing. Setting clear goals and understanding your risk tolerance can help guide your investment decisions and keep emotional decision-making at bay. If you are feeling unsure about jumping in with real money, that's where paper trading comes in, a risk-free way to test the waters using simulated money. It's an excellent method for gaining market experience without exposing yourself to financial risk. Warren Buffett famously said that investing success doesn't correlate with IQ. What's needed is the temperament to control the urges that lead others straight into investment pitfalls. Keeping a cool head, especially in tumultuous market conditions, is easier said than done. However, history has shown that those who stay invested through the lows are often able to recoup their losses and then some. It's about riding out the storm with a steady hand on the tiller, allowing the market's natural recovery to work in your favor. Now, let's dive deeper into some of these principles, expanding on what it truly means to embark on your investment journey with confidence and strategic insight. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. The stock market is a complex beast, driven by a multitude of factors ranging from economic indicators and company performance to geopolitical events and investor sentiment. As a beginner, it's essential to develop a keen sense of observation. Watch the market trends, listen to financial news, and learn from the moves of seasoned investors. Recognizing patterns and understanding market dynamics can significantly enhance your investment decision-making process. Diversification is not just a buzzword, it's a critical strategy for mitigating risk. By spreading your investments across different sectors, asset classes, and geographies, you can shield your portfolio from volatility specific to any single investment. Think of it as not putting all your eggs in one basket. Whether you're drawn to the allure of tech stocks, the stability of blue-chip companies, or the growth potential of emerging markets, ensuring a balanced mix can help safeguard your investments against unforeseen market shifts. Investing is as much a psychological endeavor as it is a financial one. The market's ups and downs can trigger a range of emotions, from the thrill of a winning investment to the despair of a market downturn. Cultivating emotional resilience and a long-term perspective is crucial. Remember, the goal of investing is not to outsmart the market with short-term wins, but to build wealth steadily over time. Avoid making hasty decisions based on temporary market movements or the fear of missing out on the next big thing. In today's digital age, investors have an array of tools and resources at their fingertips. From online brokerages and investment apps to financial news platforms and social media groups, technology has democratized access to market information and investment opportunities. Take advantage of these resources to enhance your knowledge, track your investments, and stay informed about market developments. However, be discerning in the information you consume and always cross-reference advice from multiple sources. Investing is a journey, not a sprint. It's about setting realistic goals, adopting a disciplined approach, and staying the course even when the market tests your resolve. Remember, every investor was once a beginner, facing the same uncertainties and learning from their experiences. Embrace the journey with an open mind, a willingness to learn, and a commitment to prudent decision-making. Whether you're taking your first steps into the stock market or looking to deepen your understanding, remember that knowledge, patience, and strategy are your best allies. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.